Artificial intelligence can help accounting teams work faster, but speed is not the same as reliability. In accounting, AI is useful for organizing information, summarizing policies, spotting unusual patterns, drafting explanations, and turning a large set of transactions into a manageable list of questions. It can support professional judgment, but it cannot replace it. A language model may produce a polished answer that contains a missing assumption, an outdated rule, or a confident mathematical error. It may also misunderstand the business context. That is why every important output needs a human review step. The reviewer should understand the accounting question, inspect the source information, test the result, and document what was accepted, changed, or rejected. Worked example. Imagine a fictional company asks an AI tool to explain why its equipment expense changed from last year. The tool says the increase is $12,000 because depreciation rose from $48,000 to $60,000. The reviewer checks the fixed asset schedule and finds 3 new machines added in July. The schedule supports only $10,000 of additional depreciation, while a $2,000 repair was incorrectly included in the AI's comparison. The reviewer corrects the explanation, links it to the schedule, and records the review date and approver. This example shows 3 limits. First, AI can confuse related but different accounts. Second, it may not know which internal record is authoritative. Third, a human must decide whether the explanation is reasonable in context. A strong review is more than reading the final paragraph. It includes recalculating key numbers, checking source dates, comparing the output with policy, and escalating unresolved differences to a qualified accountant or supervisor. Use controls around the tool as well. Keep confidential data protected, define approved uses, preserve prompts and source files when appropriate, and maintain an override or correction log. Separate low-risk drafting from high-risk decisions such as financial reporting, estimates, or compliance conclusions. The goal is not to accept or reject AI automatically. The goal is controlled assistance. AI proposes, a knowledgeable person verifies, and the organization keeps evidence of the decision.
When you ask an AI tool an accounting question, the quality of the answer depends heavily on the prompt. A safer prompt does more than request a conclusion. It defines the task, supplies relevant context, sets boundaries, and asks the system to show uncertainty instead of filling gaps with confident guesses. Start with a precise objective. Instead of saying, "Explain this accounting issue," try, "Summarize the revenue recognition question in this fictional fact pattern and identify the information needed before reaching a conclusion." Next, provide context in a controlled way: the reporting framework, the period, the type of transaction, and the audience. Never paste confidential customer, employee, vendor, or company data into an unapproved tool. Replace names and identifiers with fictional labels, and remove unnecessary details. A useful prompt also assigns a careful output structure. Ask for the applicable concept, key assumptions, competing interpretations, missing facts, and a short list of sources to verify. Request plain language, but do not ask the AI to make the answer sound certain. Accounting explanations should distinguish facts from assumptions and guidance from judgment. Worked example. Imagine a fictional company, North Star Bikes, that received $12,000 from a customer for a 12-month maintenance plan. A safer prompt might say, "Using US GAAP concepts at a high level, analyze this fictional arrangement. Identify the likely performance obligation, explain when revenue might be recognized, list facts that could change the analysis, and provide a verification checklist. Do not invent contract terms or citations. Flag uncertainty." The prompt guides research without pretending that the AI is the final reviewer. Finally, treat the response as a draft. A qualified accountant should check the underlying guidance, recompute any amounts, challenge assumptions, protect confidential information, and document the prompt, output, review steps, and final decision. If the answer affects a material judgment, unusual transaction, or compliance conclusion, escalate it through the organization's normal review process. Safer prompting is not about making AI infallible. It is about making the question bounded, the uncertainty visible and human accountability clear.